We're here at Camp Alphaville. It's the end of the day. I'm standing here with former UBS chief economist George Magnus. He was at Glastonbury last week. That's otherwise known as the second best festival in the UK each year. And we're here to talk about the outlook for emerging markets and for advanced economies. Let's start with the latter first, George. All right. The US, Europe, Japan, not clear that they're all going in the same direction. Why don't you tell us your near-term outlook for each of those economies?
It's very different, isn't it? I mean, I think the United States, after the pretty harsh winter, I mean, it looks like it's discovered some kind of forward growth momentum, right? I don't think it's as big as the Federal Reserve probably hopes it will be. But I think there are some, pretty decent things happening in the private sector. There's job growth. I mean, there are lots of things that are not quite right. But I think the US is probably in a reasonable place. Probably not as good as the UK, where I think everybody's been surprised by the strength of the recovery in the United Kingdom.
Very briefly, what do you attribute that to, by the way?
Well, I think a lot of the pessimism in the UK, I think, was in some ways down to the very depressed feelings that a lot of businesses had around 2011-12 about the imminent collapse of the Eurozone. It didn't happen. And it doesn't look it's going to happen in terms of a sort of dire straits now. And I think that's been lifted spirits a lot in this country.
Okay.
And the government has helped with its housing policies and so on.
All right, and contrast that to the rest of Europe.
Well, Europe, I think, is a place that most of us wouldn't want to be in. I mean, there is a feeble economic recovery going on. And the banks are reasonably stable for the time being, but we all have the feeling that underneath that feeble recovery, things are not quite right. You don't have symmetric adjustment between creditors and debtors. All of the heavy lifting is being done by Portugal, Spain, Italy, Greece, the debtor countries. That's not sustainable. And I think that it's quite possible that business sentiment and economic performance in the Eurozone by the end of this year and in early 2015 will be really disappointing.
Very broadly, what should fiscal and monetary policymakers be focusing on to alleviate this problem?
Well, unfortunately, I think the whole debate in the United States and in Britain, Europe, elsewhere, has become completely lopsided in favor of what monetary policy should or should not be doing. Bank of International Settlements has released a very controversial report just yesterday about what monetary policy ought to be doing, which is not what central banks are
Martin
doing.
Wolf was very skeptical of that report.
He was indeed. And I think both sides actually are representing rather extreme positions. The truth is more nuanced. But probably, I would say, many of us in the profession would say the real problem is that the fiscal authorities, the government sectors, really aren't doing enough to live up to their responsibilities because central banks can't solve the problems that we have.
Sure. Finally, Japan. All right, Abenomics, are you optimistic that it's going to continue and that it's going to make a big difference?
I'm cautiously optimistic because it's been a long time that Japan has basically stalled on big reforms. So, as a human being, I'd like to think that Abe will succeed in doing what he's trying to do. But actually, as an economist, I have to say I'm really skeptical. I don't think he's gone far enough. I think he still faces a lot of opposition in Japan.
This is unfair of me to ask such a broad question that I need you to answer pretty quickly, but emerging markets, you were fairly pessimistic, I think, earlier in the year that the sell-off would possibly continue, that it reflected more structural problems. Talk about the outlook for emerging markets generally and whether we should be,
Well, I think, obviously the markets, financial markets and emerging markets have bounced back with risk, generally speaking. But actually, I think they're still vulnerable because I think people don't yet really appreciate the fact that growth, which is really what everything is leveraged off in terms of equity returns and so on in emerging markets, growth is going to be materially lower in a lot of big countries for the next several years. Their growth models need
because the catch-up part of the
catch-up is done to a large extent. They're richer. They need smarter economic policies.
All right. Thanks very much. And thanks for watching. This has been Camp Alphaville. If you want to see more from today's events, go to ft.com or ftalphaville.ft.com. Take care.